Hello and welcome everyone. Welcome to 2025. I hope you all had a great break. And of course, what better way to start the year with a little bit of energy technical analysis. So my name is Marcello Kolax. I'm the managing director at Clever Markets, and this video is usually only reserved for my clients. But I thought, you know what, in the spirit of 2025, why not make it available to everyone? Okay, so let's get started with the markets. Of course, today we are going to look at the TTF, NBP front month contracts, the TTF and NBP front season. We are looking at German power. We are looking at European carbon emission certificates and a few others such as Brent as well. So one interesting thing that I definitely want to note here right away, let's get me out of the way, is that we have been putting in some very interesting peaks on the TTF and NBP front month products. So we are set up for a decline, but this is possibly only a little bit of a corrective move before we continue higher. But how we exactly measure these downside targets, when do we know we are bottoming out, what's the difference between a correction and a reversal, we'll talk about all of that in just a moment. So further down here we have the EUAs. They have been declining quite dramatically. Now I'm back from my annual leave. I went to Vietnam, by the way. It was pretty nice. We see that the market has put them in a bottom. So how much lower can it go? When do we know that we are going to continue lower? All these questions will be answered today. And of course, Brent, how much higher can it go? Well, actually, we are working with a really clear target here that I will share with you in just a moment. Okay, now let's go back to the TTF front month product. So I am starting always with a weekly chart, a daily chart, and an hourly chart. So that gives me the weekly an outlook for the next couple of months, next couple of days and weeks, and of course for the hourly chart, just the next couple of days. So let's jump into it. Here on the weekly chart, let me zoom in. There you go. We are working with this ascending channel, and as long as price is within this very clearly defined ascending channel, I would say midterm we are rather bullish. Midterm, I mean the next coming months. Now, however, we are not immune to the occasional correction, right? So you can see here on the weekly chart, we did get a spinning top. So a spinning top simply means small body, long wicks. The market doesn't really know what to do, where to go. And both parties are just trying for a direction without a clear winner yet. So the first thing that I did is I put in Fibonacci retracement levels. So you can see the 0 is up here and the 100 is down there. And if we move below the 23.6% Fib retracement, in this case 48.14, then we actually have a downside correction going on. And how low can this correction go? Well, shallow corrections go to the 38.2% Fib, in our case 46.37, and deeper corrections can go all the way to the 50%, 61.8%, so the 43.51, which isn't too far away from this channel support here. So yeah, maybe we would get something like this where we continue swinging within the channel. Provided, however, because this is too early to jump on anything, that we really make it past the 48.14, the 23.6% Fib retracement. Only then can we speak of a correction. And that's important because we want to rule out the situation where we go short because the market, in quotation marks, should go down, and but then like nothing happens, and we have a short position tied up in a market that goes nowhere, or even worse, in a market that goes higher. So we don't want that, right? If we push below the 61.8% Fib retracement, then we have more than just a correction on our hands, then we have possibly a full-on downtrend. But for this, I want to see a break below the channel. I don't see this happening yet because trend and momentum tools are all still bullish. Here we've got the EMAs, we've got the MACD, and even on the stochastic, we don't really have a bearish signal yet. So that's why I'm saying potential correction before we continue higher. But when do we know a little bit earlier, like what's happening here on the daily chart, because the lower level time frames, so in our case the daily and the hourly chart, they give us earlier signals. And here we are, right? So we do have a shooting star candle happening here. This here is not quite a hanging man, but kind of. And here we do have another spinning top. So these are essentially three candles that at the end of an uptrend tell us that the market is about to reverse lower. And there's no better opportunity for the market to reverse lower, because this is the channel resistance. So once again, we want to wait below for a move below the 23.6% fib, and this level perfectly aligns with the low of this shooting star, almost the low of this hanging man, right? And this is also when these bearish candles would be validated. So double whammy, that means people using different triggers, fib retracements or candles, are all looking at the same kind of price level, which is very powerful, right? So if we were really to break past this, then yep, we probably have a good correction on our hands. We see that on the stochastic, we are hinging. So hinging simply means we are no longer pushing higher. We are kind of like flattening out in overbought territory. This is not a bearish signal, like a straight up signal, but it is a warning. And as here, all these candles are a warning. I really want to see a break lower. Overall, why do I think that eventually the bulls will continue? That's because the momentum is still bullish, trend tools are still bullish, and we are still within the channel. So that for some traders can mean different things, right? Some traders might choose to go intraday on the hourly chart and trade this down leg from early on. Other traders, or maybe you do maybe it's all the same traders, what you do, maybe you wait for the market to bottom out, looking for buying opportunities somewhere in the troughs, right? These are all things that some traders might choose to do. Okay, now let's move on to the hourly chart. I think it's kind of interesting here because we are working with a tentative descending channel. I'm saying tentative because, come on, this here doesn't really count yet, right? We have an upper, one touch here, one touch there, one touch here. So this is barely qualifying as a channel, so that's why I'm calling it tentative. What I want to see, first of all, is a flow of lower lows and lower highs before we kick off a downtrend intraday. When is that? 49.35, right? Because below this level, we are making lower peaks, and then we would also be making lower lows for the first time, right? So I want to see the market decline below that level, and then we can speak of, yep, lower lows, lower highs. We've got an intraday downtrend, which could then lead the market lower within this channel, which would then also validate the bearish setup on the daily chart. So can you see how it's all slotting in together? So this is called multi-time frame analysis. Now let's have a look at the NBP front month product. Here we have exactly the same thing happening, but a little bit differently. So instead of a channel, we are working with an ascending broadening wedge on the NBP front month. Very difficult to trade, but we did still put in the Fibonacci retracement levels here. As you can see, I want to see, once again, I want to see a break below the 23.6% fib. I also want to see, there you go, actually on the weekly chart, let me redo that. We can put this down here and put the levels down there in accordance as well. So it's all just shifting a little bit lower. Never mind. Okay, on the daily chart, on the NBP front month, once again, we are working with this ascending broadening wedge. Difficult to trade. What we are having here is shooting star, kind of a doji, spinning top. So all of this is showing me, the market has topped out. But do I go short now? No, I want to see a move below 120. Then we can be saying that yes, okay, the market is actually correcting lower. Once again, just a correction because trend and momentum tools are still bullish. Here, once again, we are talking about a tentative channel only on the hourly chart. I want to see lower peaks. We got that. Now what we need now is lower lows. So I want to see a move below 122.89 before calling it a proper downtrend on the hourly chart as well. So before we move over to the TTF front season, just a little sentence about myself. So my name is Marcello Kolax. I am the managing director at Clever Markets, and that's what I do every day. So this is what I help my clients with. I provide daily technical analysis on a dashboard. I do provide one-on-one ad hoc access to my clients, so it's like their own remote technical analysis desk. They get these videos on a regular, and of course they do get the occasional ad hoc update as well. And if there's any questions about TA, then I usually answer them as well. So this is what I usually do for my clients, just so you know who this guy here actually is. Okay, let's move over to the TTF front season again. So what we are seeing here, TTF front season, is more or less of the same. The bulls are not quite pushing against the upper end of their channel here, but we're slowly progressing. On the way higher, of course, we are going to see the occasional correction lower, especially now that it's all set up on the front month product, which are usually highly correlated. So what we are doing here is we put in the Fibonacci retracement levels as well. And a move below 47 on the weekly chart would mean that we are actually dealing with a correction. How low can the correction go? Well, possibly until like the 61.8% fib, maybe the channel support somewhere here, 50% also doesn't look crazy. Then on the daily chart, because we want to get in some detail, right? We can't trade on the weekly chart. It's just there to give us a little bit of an overview. Here exactly the same: shooting star, hanging man, spinning top, bearish setup, but we need to wait below 47.43. Wait, hold on, that doesn't make sense. There you go. We need to wait for a move below 47 before we can actually say that we are working with a corrective down leg. Then once again, we are working with a 61.8%, 50%, 38.2 to assess how low we can actually go. Now the question is, but how do we know how low it can go? Well, for that, we always look at the intraday chart, because that is giving us earlier signals. It's helping us a little bit better, because here, right now, we are in the process of making lower lows and lower highs below 48.37, right? So we're getting an early signal here. And at some point, when we are down here, we will see that the market stops making lower lows and lower highs, and maybe we move sideways for a little bit, maybe we get bullish reversal candles, maybe we get a bullish stochastic. So this would then tell us that the down leg, also on the daily chart, is coming to an end. So right now we can't say for sure how low it's going to go, but there's no need, there's nothing stopping us from actually trading this down leg if it should happen. Now here's the thing, right? I keep talking about down legs all the time. What if we never push below 46.97? Or on the TTF, what if we never push below 48.14? Or on NBP, what if we never push below 120? That's perfectly fine, because then no harm done, right? We didn't really enter any like big position on the daily chart. We are maybe just meandering. On the hourly chart, we are taking like the smaller legs, so we can still generate some profits here, but by also avoiding any big losses by entering like a big short position up here, because we think the market will go down, right? So we always need to wait for the trigger. NBP front season, I will make it very short. Not going to bore you with that. NBP front season, same thing. Channel, rising channel. We might have pushed to a top. We are ready to push lower. We put in the fibs. The fibs will help us assess how low the market can go. On the hourly chart, tentative channel, we need a lower low past 11809. Nice, sweet, and easy. Okay, German power front year. So here's the thing. We are working with a new year now, a new contract. So the market's looking a little bit funny right now. So on the zooming out is always important. So what we see here is the front year. It's a continuously unadjusted product. So you just stick the contracts together without any sort of calculation, because that is, for me personally, the most elegant solution right now. Also the most simple one. So here we see that we are within an ascending triangle after this really strong down leg, but I want to give you a sense of scale, right? So this triangle has been going on since all of 2024, 4 essentially, and we have this big down leg that goes back a couple of years, 2022. Remember this year? Yeah. Okay. All right. So what's happening now? So ascending triangles are hard to trade, as are yeah, especially if we are getting into the apex of the pattern, because here the boundaries are getting smaller and smaller. So we have to move into lower and lower time frames in order to get any sort of like trading setups visible here at all. So once again, ascending triangles usually resolve to the upside, but for now you can see probably a little bit more sideways. If we were to push this whole thing, if we were to resolve the ascending triangle to the downside, I wouldn't be bearish immediately. Possibly what would happen then is a little bit maybe of a sideways trend. So I think we would see a little bit more of an extended sideways trend within a yet undefined range. So I think this would be more possible rather than straight up bearishness as soon as we start getting a weekly close below 89.41, which happens to be the ascending triangle support level right here. All right, let's have a look at the daily chart. What is happening? So first of all, we had Christmas break, we had the New Year, so everything is looking a little bit gappy to me. No worries here, so that simply means that the gaps themselves are probably not going to be that important. You remember, like, gaps are being filled and all that. You know the saying. But in this case, I don't know. I mean, this year, this gap, yeah, was filled, absolutely. What was this even? This was 27th December, 30th of December. Okay, cool. So this gap here is being partially filled now, right? But this is more chance. There's not much sense behind that, considering how low the volume was. Okay, so these are not moved. The market here is not moved by some big development. It's more just nobody was there, right? Everyone was enjoying themselves with their families. So that's why I'm not taking them too seriously, but I'm still marking these gaps out just in case. Okay, so what's happening now? What's happening now? We could continue higher. That is more or less indicated by tools not giving strong signals either way. So here I want to see a break above 99, which is this peak here. Then we would say that the bulls are back in charge. If, however, we start pushing below 84.95, then the bears would be in charge. Other than that, I don't really see much happening here. Yes, it is a really wide gap. It's a range. It's like 10 euros. It's crazy a couple of years ago, but right now, yeah, I think there's a lot of danger in here. The market could remain gappy for the start of this year. So that's why I'm more inclined to start looking at the hourly chart. That's giving me better signals. You can see we can actually make use of uplegs. We can make use of the uplegs here. If we are now where to push lower, maybe we would be able to see it in a little bit more gradual fashion. We are not just on the daily chart dealing with like a green candle, red candle, green candle, red candle. No, let's look at the intraday chart where we get flows in. I always want to trade with a flow, and right now there's not much of a momentum trade to be identified here on the German Power daily chart. Keep it small. In terms of trading size as well. Keep it safe on the German power markets. All right, let's do European carbon emission certificates. Okay, so here on the weekly chart, I want to quickly zoom out and show where we are. Okay, so there you go. We are below a trend line that is descending, so big long-term downtrend, but also in the medium term we were up until recently bearish within this descending channel. We just now broke higher, so this is a good chance for the bulls actually. And what that looks like on the daily chart here, you can see it makes a little bit more sense. I am working with Fibonacci extensions. Let's put these away here for 1 second, which means that this up leg after the correction will be replicated here. So you can see we already reached the 100, bang on. So the next target is the 161.8% Fibonacci extension. So I think it's nothing too crazy to believe that the price could actually go there to the 83 area. But of course, on the way higher, we do have these resistance levels, and the market isn't going to go up in a straight line. So we are going to see the eventual the occasional decline, maybe even something now like so, before continuing higher. How low can it go? Well, for that we put on Fibonacci retracements once again. You can see I put this up here, zip, and I am also putting on the 23 and the 38. And we know that as soon as we start pushing below the 23.6% Fib retracement at 73.45, then we have an actual correction going on. And then we keep an eye up until the 61.8% Fib, hold on, in this case the 50% is more suited for the market to find some support, because it is this old channel support as well. So maybe in the 50, in the 70 region before we continue higher. Why do I think that we are going to continue higher? Because the volume is really high on the up legs for now. Momentum is bullish, trend tools are bullish, all looking good, but a little bit too good. So we are bound to come down a little bit. Now, what is happening on the hourly chart? This here, oh my God. Okay, so what we are seeing here is also Fibonacci retracement levels as on the daily chart, right? We had this strong up leg. Whoop, now it all moved again. And here we are back. So we are working with these Fibonacci retracements below 73.45. That's when I say we have a real downtrend on our hands, especially on the hourly chart. But here's the thing, we don't want to wait from 76 to 73 before we do anything, right? Of course not. So I think what might also make sense is taking this hanging man here, taking the low at 74.9 and taking this as a bearish trigger. This is giving us a better signal than 73.45 for sure. So this here could make sense as well. Take this low at 74.9 in order before going short. However, if we just continue higher, no harm done, because we didn't enter anything short. Then we would simply have to remove the fibs, because the market is then just pushing higher. All right, and the last one for today, we are now looking at the Brent front month product here. So zooming out on the weekly chart, long-term downtrend, but like long term, right? So this goes back to 2022. But we can see that since March 23, we have struggled to push below 70, like 70, 71. So it's like a thick area, But overall, nothing past 70. So and with the channel in here up here, that means we have a descending triangle happening. So the market is moving into an increasingly tighter range. And here's the thing, descending triangles are usually resolved to the downside eventually. I don't see it happening, however. And what makes more sense for me is if this whole thing is resolved to the upside eventually, past 78.77, and then the bulls would be in charge. In order to rule out any sort of like extended sideways trend, maybe waiting past 81.16. I mean, not waiting, but this would be an additional confirmation for like a longer term bull trend. On the Brent daily chart, we are working with a smaller triangle that was eventually resolved to the upside a couple of weeks ago. And as expected, I did stay bullish throughout this little decline here, which is now paying off. So we are pushing higher. The triangle target is at 84.67. I want to see a move above 76.54, which is this peak here, right? Because we need, in order to continue the bull trend. 80 is good because simply it's a round number, and then we have this peak up here at 81.14, which will also come in handy eventually. Now here's the thing, and by the way here, momentum bullish, trend tools bullish, DMI bullish, so it's all looking pretty good. No sign of any sort of bearishness on the stochastic either, so we could simply push higher. I think that's a very reasonable case. However, here's the thing, if we were to push lower, we would have to start drawing in Fib retracements again from here to here, and the earliest signal for us to know that we might get a little bit more of a decline would be past 75.53. If we push below that, we don't quite know how low to go yet because we haven't drawn in the Fibs yet. It's too early for that, but eventually, even with this dip, we could push higher eventually. And also this would be then a good buying opportunity for some traders, not trading advice. Okay, so this is it for the markets. I hope you have all enjoyed that. One definitely important thing I want to point out here once more is if we are zooming out on quite a few charts, we see that the bulls have had quite a good run, right? There you can see, there you go. And the swings are fairly broad. So now it seems like we really have put in another peak, I would say, it's especially for the TTF, for the NBP, front month, front season. It does make sense. On the German power market, here, like zooming out completely, we are hitting highs. You can see we're going back to May 2024. We have hitting highs. I wonder how much higher we can go. So if we push higher, do keep an eye on the 103, 104 sort of area as well. That is very important for us as well. On the other markets, we are here, TTF and NBP, we are pushing higher already, so there's not much in sight, right? On the EUAs, get ready for more losses, but not immediately. So there is a chance for us to actually correct a little bit higher before we continue lower. One more sentence on API 2. So we have pushed higher quite a bit, but zooming out, we are still making lower lows and lower highs. So the bulls are given a good chance here, absolutely. But and it can be traded, absolutely. But like zooming out, grand scheme of things, not trading, just analyzing. This for now is just a corrective move. Henry Hub, green, red, green, red, green, red. Not nice. It's really not. I don't like this market. But overall, we are still pushing higher within a channel. We are now crossing lower a little bit, so there is room for more significant losses, to be completely honest. All right, that is it. I hope you all enjoyed this very first outlook of the year 2025. If you want to get in touch with me, find me on LinkedIn. My name is Marcello Kolax. And also you can find me on clevermarkets.com. So do check it out if that is if you think that it's finally the time for your team to get a grasp of technical analysis. If you're just getting started, if you already have your system set up and you just want to refine a little bit, that's what I'm here for as well. So I'm essentially helping energy trading teams get going with TA or refine their existing approach. Everyone else, have a great start into the year. See you next week. All the best. Reach out if you have any questions. I'm here to help. And until then, all the best and see you. Bye-bye.